going to be looking at some trend lines today. This is the S&P 500, right? I'm using tradingview.com. That's the charting platform that I'm on here. It is free. There are perks if you sign up, I believe, but I'm not associated with them. I don't get anything from them. In fact, if they want to hit me up for sponsorship, I would love to hear from them. What's up? Give me money, TradingView. But no, you can sign up there for free, and that's a good place to do drawings because of the ease and how easy it is to look back through time. I'm also using, just a heads up here before I get started, something called a CFD. If you use the real futures on TradingView, like ES futures or NQ futures, those are futures that follow the S&P 500 or the NASDAQ. Well, they're delayed, or they'll make you pay for them to not be delayed by like 15 minutes or so. If you use these CFDs, you can do a quick Google search for these. It's really simple. This one is SPX 500 USD. Boom. It's like a little hack. Something that tracks the S&P 500. Easy to look at, easy to chart. In fact, you can even trade this thing if you really want to on this platform. But it's free and it keeps you up to the second accurate information, no delay or anything. So it's kind of a workaround. You don't have to pay them. It's like a little hack. There's other CFDs for other products, so you don't have to look at a delay and you don't have to pay money. All right, so getting down to business. This is about trend lines, right? This is the S&P 500, and these trend lines go back to, well, not this chart, but I have other charts that go back to well into 2018. You can see, right, what is a trend line? Cool, you got this chart with a bunch of candles, David. Oh, you're a badass. You looked back and you just saw a trend and then you drew a line and look at it syncs up. Oh, you're awesome. Not exactly, right? So I'm drawing these lines as this is happening, right? I'm drawing this line in particular after these two plots, right? I'm not seeing any of the stuff after this. All I see is this. I don't know what's about to happen. I just draw a line, and it really is this simple. I know this sounds dumb, but it really is as simple as drawing a line where two dots are connected and seeing what happens later. Look how they're being respected. I'm going to go down to the 1 hour time frame. I was on the 4 hour time frame, meaning every little candle you see was 4 hours. As soon as this loads, you'll see now every little candle is 1 hour. Okay, so here's a good example, right? This channel, which is really just two trend lines that are parallel to one another, right? It doesn't always work like that, but in this case, this is what we're looking at. There is, okay, as soon as this loads, I drew a trend line here, right, off of these two dots, and we wait, right? We don't know what's going on for a while. You look like a complete idiot because there's no other connections being made to that trend line. You're just hanging out in space. As far as you know, you're a complete idiot. This line doesn't need to be here. Sometimes that's how it is. You just kind of wait, right? And if it's never respected again, as in this line is never touched again, then delete it, okay? No big deal. This takes practice. This takes experience, right? For you to recognize what is something being respected, like here, right? Over and over, over and over and over again, and then boom, and then retested from the bottom. And then what is just you kind of making something work by you stretching it, kind of using your imagination, right? So you kind of have to learn that from experience, but really is as simple as just drawing it and seeing what happens. So here's one off of these 2 points. There's a very, very potent example. Just so precise. Bam, barely touching that and coming back up. Here, a big drop, barely touching, coming back up again. So this is a good example of the power of a trend line, right? When you have it and it's accurate, it can save you so much money, or it could make you a lot of extra money. You could play perhaps a reversal off of this, right? So let's say the market's coming down really, really hard. Let's say you're buying something that tracks the S&P 500, like SPY, SPY. It tracks it. It's an ETF that tracks it exactly. You could buy SPY right here, right? And then you could have like a stop loss, which is like an automatic sell, like a little bit lower, right? Because you're not risking very much. If it goes a little bit lower, then you know your trend line doesn't work. cool, I want to get out anyways, boom, it sells. If it does work, there's a lot of reward for a relative low amount of risk. Okay, same with options. If you're not familiar with options, just ignore this part, but options are all about expectations. As we were probably falling low and low and lower, that option was probably getting really, really cheap because the expectation is that we keep moving in that direction. So you can buy really cheap options on a play like this that are to the upside, which would be a call option, and then just ride them out. Uh, the whole point, though, of this is to identify the trend lines that I've been drawing after this drop and into the subsequent rise. Okay, so after this drop from the global health situation, um, we saw ourselves rising into a wedge. These are almost always bearish, meaning they almost always result in downward movement after the wedge gets tighter and tighter and tighter. And you can see it's pretty clean here. That did not happen here. Instead of dropping pretty aggressively, we just kind of respected the bottom side of that particular trend line. Here, we saw 2 new points. Remember, at the time, I'm not drawing these after the fact, right? I'm not looking at a bunch of candles coming in later and then drawing these. I'm drawing these in the moment. So here's what I see. Okay, here's 2 points. I'm just connecting them. You know, don't overthink it. And look, at first you feel like a complete idiot because, look, oh, your trend line wasn't respected at all. It just got blown right through. Turns out, though, it was being respected from the bottom side. So then you know, okay, this is validated. This is a real thing. So half of it is just kind of in the moment testing, and half of it is feeling it out as more time goes by. I did it again here, though. We've got 2 new points, right, after this drop. Cool, let's connect those. Let's just see what happens, right? Well, we have another drop through and another respected again. And this is where we are now, okay? So we expected it there, and then this is Friday, Monday, and here we are now. The reason I'm making this video is we've got a new trend line here, just connecting points, right? I tried to use this one, but it just doesn't look as pretty. So something tells me this must have been like a news event or something that caused a drop more than we normally would have seen. You know, who knows, right? I don't claim to understand all of this stuff. I'm just observing and using the data in front of me, right? So we've got 2 points that are clearly the formation of a trend line later, right? So here we have another one, and then just many, many others here back to back to back. And there's another one, and then here we are literally at this very moment. When I started making this video, this green candle was not there. All I could see was a red candle coming below the trend line. Just you can see that wick just barely, barely hanging out below that. And wouldn't you know it, before this candle closed, look, it came right back above that trend line. You know, it doesn't always have to be that exact, but look, they did it there too. It's not always that exact, so it's not important to get super attached to that, but isn't it fascinating to see? You know, when I started making this video, for all I knew, we could have been broken through that. I already know this trend line's valid because look at all the points of data I've got here. But it could have been a moment where we broke through and moved lower and maybe formed a new trend, right? But it turns out it looks like we might be bouncing here, and this would be a great place to get in long, meaning you're buying to ride the S&P 500 up higher. You could use, like I said, SPY. That's the SPY. I believe there's other ETFs that are more leveraged that move harder and faster. For example, I know TQQQ follows the NASDAQ. It's a 3 times leveraged ETF, meaning it just moves 3 times as much as the NASDAQ would just naturally move. So you can get more money, more points out of that. Like I said, Google's your friend. Use Google to look up stuff like that. But this would be a great entry point for me in this case, since the market wasn't open when we were touching this trend line, and I suspected that this might happen because we're in a very strong market lately. Where was the market open? Let's see, 1600. Okay, so the market was open right here. Here's where the actual market hours ended, right? And we're really close to that trend line. I did go long. I went long here. with some call options. And I believe I used a couple of different sectors. So I used XLK, which is the tech sector of the S&P 500. I believe I used SPY, which is just the S&P 500 itself, right? An ETF that tracks it. The point is, if you can master these trend lines, they can be very, very, very helpful in knowing when to get out of something. As in, we've broke this trend line, right? So remember back, let's say like back here, right? This is when the big fall started, the big fall from the global health situation. When we broke through this trend line a little bit right here and retested from the bottom, but then came back, I knew, okay, this isn't serious. We're going to stay in this channel for a little bit. This is why I say it's not always perfect, right? This was news-driven drops here, okay? But when we broke through this time, didn't come back, we actually closed pretty strongly below this channel and then continued down. And then even when we made this next high right here, and we didn't even come close, and we continued down, then I knew, okay, this is going to be, we're in for Mr. Toad's wild ride. So they can help you get out if you're long, right? Meaning if you bought this and you're in it, and it can help you get in to other things like when it does bounce, you can know to buy, right? Or in this case, if you want to go short, which means bet against this particular asset, this is the market. So if you want to bet against the market and it breaks through, this is a great time to enter that short. So these can be incredibly helpful, and they're one of the sole things I use to make decisions about the broader market. Cool.